All right, so all week we've been talking about ways that you should own the future. Part of the future, of course, though, includes how we're lured off of our sofas into certain industries where businesses are somewhat struggling. The answer, of course, is always going to be technology. I want you to check out, for instance, this Taco Bell Defy. Now, they call it that because it defies the norms and it will define the future. It's got a very small footprint, but technology actually allows it to serve more customers. It looks so cool. And imagine if you go there late Friday night after you had a few, right? And then there's this Nike store in Seoul, South Korea. This is amazing. They call it the Nike Rise. It's designed to merge digital and physical for what they call a unique immersive shopping experience. It's all cool stuff. It also means really big money for investors if you know where to look. I want to bring in Kingsview Wealth Management, Scott Martin. And Scott, a lot of this is that radio frequency ID stuff you see with those Amazon grocery stores where you go in, you put everything in a basket and you leave, right? How can the audience get a piece of that action?
Yeah, and it's action that's going to happen a lot going forward, Charles, just as kind of, I guess, the post-pandemic retail environment emerges. And just as an aside, anytime you talk about Taco Bell or weave that into a stock story, you've got my attention. Love Taco Bell, hardcore. That's Yum Brands, by the way. Here's RFID technology, though, that looks good to us, Charles, is in Zebra Technologies. Great, fundamentally strong company, has rallied a lot in the last several years, even pre-pandemic, just because these guys are dominators in the space. So ZBRA is one that we actually like here to further take advantage of the trends going on.
I'm going to toot my own book for a moment. I have an entire chapter dedicated to Zebra in my book, Unstoppable Prosperity. Folks, you have to read how I discovered Zebra, how you can discover things every single day, connect the dots, and you can make a fortune. I digress. Let's talk about these retailers and restaurants themselves, though, because I got to tell you, I think these retailers, a lot of them are going to survive. The stocks are already acting fantastic. A year ago, everyone hated Kohl's. I've seen upgrades on that. Everyone hated a lot of these other names. What are some of the names you like there, Scott?
Yeah, a lot of ones that were hated was like TJX, which is one that we own, and we've owned that for a while, Charles. A couple other names that I guess I'm a little not embarrassed to talk about because they've been awesome, but they were funny at the time. I mean, we could go back in the tapes, you know, when we were talking about this retail re-emergence. How about Darden Restaurants? How about Bloomin' Onion? Yeah, Outback Steakhouse and those guys. Like, those are companies that have really done the following, Charles. They still have the in-room dining. They still have, you know, the traditional kind of dining experience, but they have totally shifted their business lines to the pickup and the carry-out and so forth like that. They've got good food as well, like Taco Bell. I'm saying that kind of with a straight face here, but that's food I like also, believe it or not. So those are areas, too, and restaurants that I still believe are set to emerge, and they're ones, too, that you need to take advantage of when you see some pullbacks like we have in those stocks in the last couple months.
All right, so we talked about the future. Let's talk about the past. This Sunday will be the golden anniversary of Nixon taking us off the gold standard. You're a gold investor. You think it was a mistake? I mean, obviously, I think it's too late to ever go back, but if we could, would you?
No, I wouldn't, and I think we got to be grateful that we're not. And yeah, you know, I've been called gold member on Twitter and on Facebook and Instagram because we love gold. You know, like Austin Powers used to say, or the actor used to say, Mike Myers would say, as he was gold member in the movie, because gold to us has value in the sense of, Charles, when we invest our clients' money, it's not stock and it's not fixed income. It has its own kind of correlation value amongst traditional asset classes that many investors hold. And therefore, that's why I think gold going forward is going to be a great addition to your portfolio.
I'm going to go back a little further and talk coal real quick. It's up 114%. I think it keeps going in part because of China. Is there a way for the audience to make money there?
Sort of. You know, it's funny with coal. I don't have the onions, let's say, to jump into coal here, given the crazy move. I mean, you look at coal prices, like you mentioned, the last few months. It's wild. I actually believe kind of the forgotten piece to this whole energy scenario is natural gas. Cheaper, easier to get. There's more of it. So UNG is an ETF that tracks the futures price of natural gas. It's trailed coal. It's trailed this whole move. It's been kind of the hated kind of partner of coal, if you will, or the hated kind of alternative. And that's one I'd look at as maybe playing catch up here.
Scott, you gave us a lot to chew on, pun intended. Have a great weekend, my friend. Liz Clayman, over to you.